Welcome back to the channel. In today's video, we are going to talk about why today's inflation numbers is a trap for crypto investors. So if you are buying or holding Casper, Bittensor or SUI, or if you are just accumulating crypto, give this video a like, sub to the channel. This is a video you don't want to miss, especially if you are DCAing into these markets. There's a mistake right now that could wipe out portfolios over the next couple months. And it all traces back to a fundamental misread of today's inflation print. According to the FedWatch tool, market now expects no hikes, with the odds dropping to 12% from over 40% just a week ago. Rate hikes are for the moment delayed, but without the labor market further deteriorating, the inflation can has just been kicked down the road. My expectations are, with the resumption of hostilities between America and Iran, inflation pressure returns on the next reading. US CPI just fell from 4.2% in May to 3.5% in June, the biggest drop since April 2020. The knee-jerk reaction? Inflation's falling, so pump crypto. Not so fast. Not every inflation drop is the same. It all depends on the rate of change in growth. And right now, growth is stagnant while inflation is quietly reaccelerating. Why? Oil. The Strait of Hormuz standoff and escalating Iran conflict have sent oil prices jumping, flipping our model from bearish to neutral, a positive rate of change. That means the June CPI deceleration was really just capturing last month's oil sell-off. Now that oil's bouncing back, inflation could stay sticky in the low 3% to upper 2% range, still nowhere near the Fed's 2% target. For stagflation to actually resolve, one of two things generally needs to happen. Either growth needs to reaccelerate meaningfully so the economy can absorb higher rates without breaking, or inflation needs to come down on its own, usually through a supply-side fix like energy prices stabilizing, rather than the Fed engineering a hard landing. Until one of those two shows up in the data, the environment stays messy. And right now, neither is happening. Growth is flat. Oil is heating back up. The US yield curve is still stuck in its flattening phase despite the recent bounce. All of it points to the same conclusion. We're firmly in stagflationary territory. So what do you actually do with this? My backtests show that in stagflationary regimes, the winners are not the high beta risk curve plays. They're the quality, lower volatility assets with real fundamentals and actual demand, not hype-driven momentum. This is why generational buys for the likes of Casper are a real possibility. Don't get me wrong, prices are cheap enough right now to start building a worthy portfolio, but setting limit orders lower is going to reward you huge. We have dropped some of these key buy levels in the Discord. So, what is stagflation and why does it matter for crypto? Stagflation is the combination every investor dreads. Slow or stagnant economic growth paired with persistently high inflation. Normally, these two don't happen together. In a healthy economy, growth and inflation move somewhat together. Strong growth usually brings some inflation with it. And when inflation is a problem, central banks can raise rates to slow growth and cool prices down. But stagflation breaks that playbook. You get rising prices without the growth to justify them. And that puts central banks in a brutal position. If they raise rates to fight inflation, they risk crushing an economy that's already weak. If they cut rates to support growth, they risk fueling inflation even further. There is no clean tool to fix both problems at once. For crypto and risk assets, this matters because stagflation kills the easy rates coming down, everything moons narrative. Liquidity doesn't flow as freely, risk appetite shrinks, and capital rotates away from speculative, high beta plays toward assets with actual fundamentals, real usage, and durable demand, regardless of the macro backdrop. This is exactly where Casper, Bittensor, and SUI come in. These are built for accumulation in this exact environment. Casper's proof of work, security, and real throughput. TAO's genuine AI compute demand. SUI's growing developer and transaction activity. None of these are riding purely on beta to risk on sentiment, which is exactly what you want when the broader market is choppy and directionless. You're already seeing this bifurcation play out across the space. Some assets are showing real price acceleration on fundamentals, while others grind lower on weak volume. That's a clear tell that this isn't a buy everything tape. The big mistake is treating crypto as one trade. It's not. This is a market that's separating quality from noise in real time. Rotate into fundamentals. Accumulate the assets built for the next cycle while everyone else chases the narrative. Even if you are purely gambling, education is the key to surviving the bear market. Understand the macro and you will be free financially. If you want the full breakdown on our Stagflation Playbook and asset rankings, that's exactly what's inside the VIP links below.